Hi, this is Lara at Elliott Wave Gold with your end of the day analysis for the trading day ending August 31st. And tomorrow is the first day of spring. Happy spring tomorrow, everybody. I'm expecting a little bit more downward movement, but the end is very, very close now. Price is at support. We've got divergence with stochastics, and we've got volume spikes for upwards days, suggesting that an upward breakout from a consolidation is more likely than downward. While price remains within the narrow pink channel on the daily and hourly chart, assume the short-term downward trend is intact. We need to see that channel breached, and if price moves above 1330.01, then assume that the upward trend has most likely returned. Let's have a look at technical analysis in today's video first. At the daily chart level, we've got a small real body with relatively even upper and lower wicks. It's almost a spinning top. It's mostly a balance between bulls and bears, with the bears winning to close below the open. Price is now in this support zone, which is about 1310 to 1305. This is previously a point which has provided resistance and support, and it's now likely to do so again, either 1310 or 1305, about those points. Price has moved into a range-bound consolidation pattern after an upward swing ended on this day. Here's the first day of the sideways consolidation, and during this time it's this upward day and this upward day here which have strongest volume. That tells us it's more likely that gold's going to break out of this range upward than it is downward. ADX is very obviously telling us that we're in a range-bound market, we're not trending. ATR agrees, ATR continues to decline, so these two indicators being in agreement are telling us quite strongly that this market is not trending and price is range-bound below 1375 and above 1310 to 1305. So we should be expecting price to swing from resistance to support and back again, and to only turn when price reaches resistance or support and stochastics is oversold or overbought at the same time. So we had stochastics overbought here, just reached into oversold, overbought, and now it's in oversold, and now we have multi-day small divergence between price and stochastics. And so that's telling us that it's very, very likely that this downward swing is going to end either here or very, very soon indeed, and that we should be expecting a new upward swing. The Elliott wave count will be expecting this is the last swing within the consolidation and will then break out upwards, and that's supported by volume. These two strong volume days. On balance, volume today has come down to touch this yellow line. It may find some support here that may help to halt the fall in price, but this trend line has been weakened by a breach and then a re-entry above it by on balance volume, and so this is just a weak piece of support for on balance volume. If we see a little break below this yellow line, that would be a weak bearish signal. If we see a break by on balance volume above the purple line, that would be a strong bullish signal. RSI is not extreme. There's still further room for price to fall, and there's no divergence today between price and RSI to indicate weakness in downward movement. We've gone over ADX and ATR. They're telling us the market's range bound. We've gone over stochastics. Bollinger Bands for the last 5 days, after a period of tight contraction, are now starting to widen slightly. Now, that doesn't tell us what direction the next trend is going to be. It just tells us, as Bollinger Bands contracted and remained contracted, that the market was consolidating. So we've got 3 indicators, ADX, ATR and Bollinger Bands, all telling us that the market was consolidating. Now Bollinger Bands are telling us that we may be starting to see some volatility return to this market. The Elliott wave count and volume expect that that volatile movement is going to be upward. Let's have a look now at the Elliott wave count at the daily chart level. I've spent some time today to try and look for a more bearish Elliott wave count. I haven't been able to find anything that I'm happy enough to publish, but I will keep looking, and if I manage to find something that has a good fit and has the right look, then I'll publish it for you, but so far I can't see it. So far from that low back at 1045 in December last year, we have a primary degree impulse up and a primary degree expanded flat correction over here. Both of my wave counts are identical to this point here, and if you want to see how this fits into the larger picture, I'm linking back every day to weekly charts. Within primary wave 3, this main wave count expects that intermediate wave 1 only is over here, and the intermediate wave 2 is either over, possibly here, or very, very soon. If my wave count is wrong today, it will be in expecting a little bit more downward movement. If my target is wrong, it will be too low. We might not get that last little piece of downward movement that I'm looking out for. When intermediate 2 is complete, then I'll be expecting a third wave at 2 large degrees upward. Primary 3 will reach 1.618, the length of primary 1 at 1582. That's a normal length for a primary degree third wave, well, a normal Fibonacci ratio between a first and third wave. That's most common for a third wave to be longer than a first wave, and so this is the main wave count. It expects the most common scenario to unfold. Intermediate 2 is a zigzag. That's also the most common structure for a second wave, so this all follows a common pattern. Zigzag, subdivide, 5, 3, 5. Minor wave B here is an expanded flat, 3, 3, 5. They're really common structures. And now minor wave C fits 1, 2, 3 may have been over here, but I've got an alternate today that sees it over here. 3, 4 possibly over here, and now a final fifth wave down unfolding. At 1288, minute wave 5, if it began here, would reach equality in length with minute wave 1, but the target might not be able to be met. If price does move below support on that technical analysis chart, then the next line of support would be this maroon trend line here on this Elliott wave chart. This is the lower edge of a base channel which is drawn around primary waves 1 and 2. This trend line is drawn from that low back in December at 1045 to this low here, the end of primary 2 at 1200, and extended it on out on a chart at the daily level on a semi-log scale. So draw that line carefully on daily charts. If price does move lower and comes down to touch it, look out for very strong support there. If that happens, I will be entering a long position. Intermediate wave 2 may not move beyond the start of 1 below 1200.07. Let's have a look at how minor wave C may be ending, where this high here might be minuet wave 4 within minute 3. We might have had minute wave 4 over here as a shallow zigzag. There's only some alternation here between minute 2 and 4. Minute 2 was a deep zigzag. Minute 4 only shows alternation in depth. It's shallow, but both of them are zigzags. Alternation is a guideline, not a rule, and we have to apply it flexibly. Within the structure, there is some little alternation within the zigzags. Minute wave 2 is longer lasting and had a big complicated B wave. Minute wave 4 is more brief, and the B wave is more brief and shallow, so it has a different look. If minute wave 5 began here, then it's very unlikely to be over here, because from this high to this low it just doesn't subdivide well as a 5. It looks like a 3, and so I think we may have 1, 2 and now another 1, 2 almost complete. And so for this wave count, the target at 1288 may be met in probably another 2 days of overall downward movement with corrections along the way. I've copied this pink channel over from the daily chart to the hourly chart quite carefully. While price remains within this narrow pink channel, then expect it's very likely that the downward trend is still intact. Within minuet wave 3 of minute wave 5, when subminuet 2 arrives, it can't move beyond the start of 1 above 1315.89. If that price point is invalidated, then we'll consider this alternate. At that stage, we may have a little bit of confidence in this alternate. What if this was subminuet 4, not minuet 4 1 degree higher? The subdivisions will fit, and so now we've got minuet 4 here, minute 4 here was over more recently, and now minute wave 5 begins here. So within minute 5 we may have 1, 2, 3, 4 and need only a final fifth wave, which would be likely to make at least a slight new low beyond the end of 3 to avoid a truncation, and when that's done the whole structure could be over very, very soon. Look out for surprises to the upside with this wave count now for gold. If this wave count is correct, then we're seeing the end of an intermediate degree second wave correction within a primary degree third wave, and the next move for gold should be a third wave at 2 large degrees to the upside. It could begin explosively. That is possible. At the end of this analysis, price is finding support about the lower edge of this dark blue channel, which I've copied over again carefully from the daily chart. That price is finding support here. If it continues to do so, may be an indicator that downward movement is very, very close to completion. This trend line, this blue trend line or this pink line, one of these may be where downward movement ends. At the daily chart level, I'm just going to actually go back and explain why I've got this price point 1300.01 on the main wave count. With that second alternate hourly chart, if minute wave 4 was over here, then what if it wasn't over? What if it's continuing sideways, maybe as a triangle or a combination? If minute 4 is continuing, it may not move into wave 1 price territory above 1330.01. This is still going to be an important price point. A new high above that point tells us that upward movement could not be minute wave 4, and so minor wave C could not be continuing because the fourth wave within it can't move into first wave price territory. So a new high above this point tells us that minor C is over, which means intermediate wave 2 should be over, which means a third wave at 2 large degrees might be up in the early stages upward. And so that's why I have this price point as a further confidence point. At the daily chart level, this is an alternate. It's identical to the main wave count up to this point here, but if we move the degree of labelling within this impulse up 1 degree, it's possible to see primary 3 could be over here. But if this is the case, then it would be shorter than primary wave 1. There's a core Elliott wave rule which states a third wave may never be the shortest. That does not mean it has to be the longest. That's a misinterpretation of the rule. The rule clearly states it can't be the shortest. So when third waves are shorter than first waves, what that means is the following fifth wave up is limited to no longer than equality in length with the third wave, so that the rule is met. Here would be expecting maybe a little bit more downward movement if price is going to find support at this lower edge of the black channel, which is blue on the main wave count. If price continues to find support here, then it might not be much more downward movement, and then when it's done, we could be seeing a trend change and the next wave up. If price turns before making a new low below 1282.68, we will still have both these wave counts. We won't know if the upward wave is a fifth wave at primary degree or the middle of primary wave 3, a third wave at intermediate and primary degree. Both possibilities will still be viable. Primary wave 4 can't move into wave 1 price territory below 1282.68. If price does make a new low below that point, then this alternate would be invalid and only the main wave count would remain valid. I've already gone over regular technical analysis, so that's the end of that for me today with your extra video update for gold, and I hope that all of our members are having a most fabulous week.